Okay, perfect. We are live. Hi, Steve. Welcome to Venture with Grace.
Hey, Grace. Thanks for having me.
To start off the show, I would love for the audience to get to know you a little bit more. So, you have founded YC company back in 2010, and then later on you work at Bridgewater and Instead Venture Partners, and now you're a partner at Menlo Ventures. You've been at Menlo for like over 9 years. Why don't we start with like what were some core lessons that you've learned early on founding a social network to now working on investing in the top supply chain and like Series B and C stage companies.
Yeah, for sure. No, happy to get into that. So, was fortunate to get into YC. This was back in 2010. So batches
OG.
were, yeah, almost OG. I guess the real OG would have been back in Boston, which a lot of people don't even realize. But we were out in Mountain View. Um, we had started a company. Think of it as like a Google Plus. Kind of before it was Google Plus. It was a type of social network that was really built around circles, and the whole hypothesis was that you didn't want to have the same profile for your fraternity, your work, your family, your friends, and so you would actually want to divide that into discrete social circles. Really didn't end up being the right paradigm for interaction. I just think there was too much maintenance and inertia to maintaining multiple profiles, and so people would inevitably consolidate down to one. I'd say it taught me a couple things. One is just how hard it is to build a consumer company. I mean, there's just like a certain amount of magic that you have to capture, a certain amount of lightning in a bottle, and if you don't get that, there's kind of no amount of tweaking that will really get you to that product market fit. And then the second was just how hard it is to build a company. Like I felt like I was not a very good founder. I felt like I didn't build a great product, but like the thing that I did really like was being part of a batch of folks, and some really impressive companies came out of the batch. PagerDuty, Docker, some others, and like just seeing, hey, what are the problems that people are going through? Is there kind of common pattern recognition that goes across the batch, and how do you kind of build up some expertise there? And so for me, despite not being super successful or not being successful at all on the startup side, just having that experience with the other founders, I think was a great inspiration for like, hey, could I do this one day from the venture capital side and have a portfolio of companies and eventually be able to help them pattern match, recognize things that may be common to all of them. So yeah, that's how I describe that journey, and also a little bit more like, hey, as an investor, I have primarily gravitated to things that are more on the enterprise side.
Totally. I wonder, so like I completely understand. Like I feel like at that point the trend was like towards like social networking platforms as Facebook was a huge success. And compared to today, maybe it's not like a good comparison. I feel like it's a good comparison because I feel like AI is like another we're in like a huge AI wave. Maybe the equivalent is like mobile to like AI. And I wonder when it comes to like picking up these like major trends, what's your thought process on as a series like later stage, like a series B or C investor, what's your thought process on like evaluating which trend that you should jump on versus like what trend not? Because since I feel like nowadays every company is going to become an AI company, how do you identify what company have like actually core differentiation versus not?
Yeah, it's interesting. And I think there's discrete areas where you can be wrong on trends, right? If you were to say, hey, for example, and despite the fact that there's people who have been very successful, I would say there was like a brief hype period of Web3, right? When we talked about we're building a distributed internet, and a bunch of companies kind of jumped onto that. But I would say we fairly quickly pivoted out of that as an industry, and that has not yet been something that's been a big driver of value or returns. That was obviously a very discrete kind of controversial way of saying, hey, the internet is going to be rebuilt in a distributed architecture. Versus when you look at things like cloud or AI or like these essentially ingredient technologies that just make services and existing products better, I think in those cases it becomes very clear that like, hey, this is a mega trend. And I think you could reasonably debate who captures the value, what is the timing of that mega trend. But I think it's hard to debate that like, hey, cloud at the time or mobile or AI is going to be big and it's going to be important to just about every company. And so there's like these sectors where you say, hey, maybe like social network or Web3 or, other things that are kind of more discrete that you really place a bet on versus like, are there ingredient technologies that's going to make everything better? And so I would draw a little bit of a distinction between those and say like, hey, when we're betting on trends, we would probably rather be in the kind of ingredient technology type trend, which will benefit a bunch of companies versus, hey, there's like this kind of discrete thing that may or may not work out. But certainly we will do both. And, as a VC, you have to make bold predictions around where the world is going at a certain point. Otherwise, you're never going to make any money.
Totally. Can you maybe can you give us an example of like maybe call it two different Series B or C company that you are evaluating in the same space, and then you pick one versus another?
Yeah, I mean, it's interesting. I think as an investor, I tend to like companies that are in vertical industries and are perhaps a little bit less competitive, right? And I think that's for a couple reasons. One, when I look at the AI trend, like I think horizontal incumbents have certain unique advantages and their ability to bundle and leverage their distribution as well as avoid replatforming makes them a formidable foe. And second, like to your point, it can be pretty hard to pick, if you look in, I don't know, a sales enablement space or anything like that, it can be hard to pick a winner where we invest, at Series B. Like things can be noisy. There's often like a couple really great founders, a couple really great products. And so, I think people look to team, they may look to product differentiation. There's lots of things that we'll kind of evaluate and I'll look at in a competitive space like that. But where I've looked at some of the more recent investments that I've made, I think they've been in vertical industries and they've been at least pretty unique from a kind of modern company perspective. So if you look at Enable in the supply chain, started out in rebate management, but now does a whole broad set of optimizations for trading relationships. Like they were pretty unique, right? There weren't three other startup competitors. There were a few legacy competitors. People tried to do this with spreadsheets with their ERP. And so that I think ended up being very attractive because there wasn't this really acute competitive pressure from another, modern venture-backed company. I'd say the same thing for Elios, which is a scribe for the behavioral health market. And I think there's going to be enormous value created in medical scribes for general medicine, but it's also going to be incredibly competitive. And I look at a company like Elios and said, hey, this is a market that they really have a chance to dominate. And so far, I think they've been nicely on that path. So I think investors look at things differently. And, certainly there has to be a time where you'll make a bet and say, hey, this is a competitor in this space that I like better for a variety of reasons. But me personally, I've really enjoyed looking into, hey, are there vertical industries and discrete use cases where companies really have the potential to be, an N of one company without getting dragged into that sort of competitive war.
Totally. I wonder, so like for the diligence process for like Series B and C companies, there is like a lot more data. And I wonder like what would you say would be the data that actually matters for like call it supply chain companies or the I'm on that around that line. So is there stable like call it like customer data that you are rely on, or I guess like what would be the thing that actually matter to evaluate?
Yeah, I think We are, I mean, just by virtue of being inflection investors, which is how we brand early growth,
Mhm.
we're looking for early signs of product market fit, but it's not all going to be in the data, right? Like we're really, when we're successful, we're really trying to blend together the venture ethos where we have conviction around the founder, the product, the market opportunity, with some of those early signals around growth and repeatability. So, the things that are really important at that stage, I would say like retention, probably first and foremost. Like, have you built a product that people really love? Are there kind of early signs of renewals and upsells? And then, the second I would say is just like early signs of sales repeatability, right? Which is like, is there some sense of logo velocity? Is there some sense of pipeline building? Do you understand like, hey, here's what a rep could do? And like all of these are going to be hypotheses, right? There's not going to be hard and fast, like, hey, there's 3 years of data and we know exactly what our customer base and market looks like. But if you can prove that, like, A, your customers like the product and they're retaining, and B, you know what those customers look like and go how to get them, or at least have a good hypothesis on that. I think those are the early signs that will tell you, along with, the other kind of attractive characteristics, that it could be a good time to lean in on that company.
Totally. I like, so you wrote an article about, like, it's called No Weak Links, Collaboration Will Strengthen the Supply Chain. And then I wonder, so like what were the inspiration of the article? And obviously you talk about like manufacturing and distribution, shipping and logistics, retail. I wonder, when you're thinking about the entire supply ecosystem, oh, by the way, LinkedIn user says shout out to Steve. Okay, so I wonder when it comes to like thinking about the entire supply chain ecosystem, how do you identify which area actually can be modernized? Like, so I chatted with other investors. So there were like a lot of investors were saying, so for example, like there's everything is documented by, call it like paper sometimes, and then like, so there's a lot of things that are really hard to change. Like you can't just like ask everyone to have an iPad and like, putting in the same kind of like benchmark into things. How do you identify which part actually can be modernized by AI or like technology? And then how do you identify which part actually is like the most lucrative in the entire ecosystem?
Yeah, and so I think you see these waves of modernization, right? And I think the key is to kind of catch the early part of the wave, but not too early, right? And the classic analogy in venture, or the, an aphorism, I guess people say, oh, too early, too early, too early, too late, right? And so, to a certain extent, you got to be right on the cusp of earliness, but like not so early that, like, to your point, there's just some industries that you think they're going to modernize and they tend to be, then they end up being laggards for another decade, right?
Mhm.
And in that case, there's just not a lot you can do. um, so I think you've seen these waves in supply chain, and some of them are catalyzed by ingredient technologies, right? When you think about uh, like the big companies like Samsara and others that have been built, like really in a lot of ways, like if you looked at the ELD mandate, right, which is like the electronic locking device for companies, it was like, hey, all of a sudden, like we actually have to understand where our assets are, and we have to be able to kind of have that data. And so a company like Samsara can come in and obviously with great technology and an innovative product, take advantage of that wave. And it just becomes like very clear that people have to adopt, right?
Mhm.
I think you look at certain things in the warehouse, and Kiva was obviously a pioneer there. And we invested in Six River Systems. It was very clear that like warehouse logistics was ready for a refresh. Like Kiva had been kind of taken out of the market by Amazon, and the Six River team knew that better than anyone because they were ex Kiva execs. And so there's certain things that I think will come up. It's clear that there's demand. It's whether, there's labor pressures, there's regulation, there's definitely things that like are going to be coming up, and you'll see a wave of logistics in the warehouse or trucking technologies or things like that, right? And then, now I think we're headed into more of a wave around manufacturing, right? I think there's smarter collaboration. I think there's a lot of interesting companies in PCB design. I think there's, enormous potential for technologies that are doing quote unquote generative design, right? Where they're really helping you iterate more quickly on, hey, here's the ideal part for this, here's how you kind of make it most aerodynamic. And instead of running it through, months long simulation processes, you can use the AI to speed that up. And so, yeah, I think there's signals that come from a bunch of different areas around, hey, where do you invest and when's the right time to catch that wave? And then ultimately, like, can you see the early signs of that manifesting and identify the catalyst, and then back a number of different companies that will ride that on the way up.
Totally. I'm sure you're collaborating with like maybe earlier stage investors. And I wonder when it comes to like identify a company early on, how do you think about like, so I think like on this other podcast, you chat about like the Mexico ecosystem, like people coming out of like Rapid or some other company that are like creating a tiny like mafia of like successful founders. Is there like for how would you suggest like people that are in like a earlier stage than you looking at the supply chain ecosystem, is there a few company that you feel like actually having a lot of breakout talent? And beyond the talent part, like how do you diligence if something is having like a viable business model down the line? Like what would be your suggestion for kind of like the seed investors or series A investors?
Yeah, it's interesting. I have so much respect for the early stage investors because they're the ones who are really the visionaries, and they can take these early bets and really see where the future is moving. I think a lot of it is really founder bets. Like some of it is going to be, hey, I have a thesis on where the world is moving as an investor, but like ultimately just founders who are practitioners are always going to be, at least my bias is, they're always going to be 10x smarter than professional investors, right? Because like we're just not that deep. Like we may have a bunch of different things going on, but like if you were the person who was in the warehouse or worked at a company that was successful in the space, and you just saw something like, hey, there was a trend here that was unique, your insights are going to be much more powerful. And so I think for those seed investors, like really just focusing on founders, who deeply understand the space, who are credible, and, who have seen something that they feel that they can disrupt is the way to go. And, I think it can be tricky in supply chain because, as you say, there's many things that are just more complicated under the surface than you think, going forward. There's just more constituents, there's more complexity, there's more old technology, there's more things that can go wrong. And so it can be hard to be, hey, I came from Salesforce or you name it, big company, and I have an insight about the supply chain. I think a lot of those founders can often be surprised by that complexity versus, hey, I'm native in this industry, I've really seen something that I can figure out. And that gives me a springboard to build technologies that are actually useful and able to be adopted by customers. So, yeah, my advice to early stage investors, not that I'm qualified to give it, is just really, really focus on that founder market fit.
Totally. I so like in 2022, you have like written an article about the vertical supply chain market map. So you've chatted about like, food and beverages, pharma, retail, construction, and industrial materials and parts. Um, to identify these like different category of things, I feel like the food and beverages have like the most amount of company in terms of like volume. I wonder like how do you typically identify among these like five different industries, like which parts you spend most amount of time on? And for for like identifying a company in call it like a food and beverages space, how do you quickly identify like which part matters?
Yeah, so I think we could spend time in all those industries, right? And ultimately you look at like, hey, where are the vertical supply chains that'll matter? It's it's kind of obvious to some extent. Like if you look at the big industries, it's like, hey, food and beverage, healthcare. We've seen a bunch of different in medical supplies. You could go into a number of different areas where you say, hey, like these are just like the big specific supply chain. And look at Lineage, right? Like that's a company, obviously, not necessarily a tech business, but like had an insight just around, hey, how do you kind of more effectively distribute perishable goods around the country? And like, how do you build warehouses to support that? And like those guys have built a monster business, right? And so I think you can look at all of these different big areas. You can start to see who the emerging companies are. And then like where is the like hey, how do you prioritize that? Like where's the pain? Like what's underserved? Like is there a specific reason why you need a vertical technology here, right? Like that's very clear for perishables. It's like, hey, you can't drive it in a non-refrigerated truck. In medicine, like you would see the same thing for medical supplies, right? There's different payers, there's different ways in which you have to warehouse it. Like there's lots of compliance things that you need to do. And so I think you can very quickly say, hey, this is a large industry and it's underserved by a horizontal solution. So, there's kind of an opportunity for a verticalized player to come in and build something of value.
Totally. I wonder, can you maybe use any of your portfolio company as an example, to demonstrate how does a supply chain work from like one end to the other, and then how does that company kind of play in the ecosystem to accelerate like the efficiency?
Yeah. I think one of the interesting things about supply chain companies is they can deliver value, or supply chain technology companies, they can deliver value to multiple constituents in an ecosystem.
Mhm.
And what that ultimately means is there's a pretty interesting opportunity for network effects, because ultimately you can become the standard. And if you have a bunch of different folks who are coming from different angles of the supply chain getting value from your platform, that's going to be very sticky over time. So look at it, Enable, right? So Enable, in their core use case of rebate management, there's distributors. So there's manufacturers or suppliers, right? So someone who makes the product. So think about Coca-Cola, right? There's distributors, which are going to be folks who bring that product to market. And sometimes they can be captive, like so actually owned by Coca-Cola, or they're just, mom and pops, regional businesses. They take the product that the manufacturer made and they bring that to the retail shops, everything from kind of a convenience store to Walmart, right? Because that manufacturer doesn't want to get involved in all the complexity of bringing the product to market. So what happens is when these goods come to market, the distributors are incentivized by the manufacturers to bring those goods to the right regions, with the right SKUs, and depending on how they perform, they'll get paid a rebate, which is often all of their profit. And so enter a company like Enable, which manages and optimizes all of those payments on both sides of the ledger, right? So if you're a manufacturer, I want to make sure that all the payments I'm making are correct and they're incentivizing the right behaviors. If I'm a distributor, I want to understand what all of those behaviors are, how to optimize my profitability, and then make sure that I'm collecting all the money that's owed to me. So that even goes further in, like, now retailers will work directly with manufacturers and distributors on special pricing agreements. And so you can think about a similar use case for something like Enable, where it'll help both of those parties, the retailers and the manufacturers, work together to deliver the best agreements. So, yeah, I think that's a good example, because it's like, hey, there's three distinct parties in this supply chain. They all have different jobs to do. There's various incentives that need to flow between them. And if you can create a common software fabric and layer between them, like Enable, you can deliver a lot of value and then, become an industry standard for these folks.
Totally. I wonder, when it comes to like distribution, like so using Enable as an example, how are they connecting themselves with like um call it like a Pepsi or like something that's like from like the brand end to the restaurant end? Like, is there like a restaurant association that they could just selling into, or is there like do they have to go like one by one to sell to like different distributors like each time?
Yeah, there's both, and one of the interesting things about Enable is that they actually can serve a number of different industries. I mean, I think we serve dozens and dozens of industries, everything from kind of food and beverage, medical device, to swimming pools, to toys, right? And so everyone has this problem, everyone works together. But to answer your specific question, they can do both. They can go direct to, a single distributor. They also have trade associations, distributor partners who will kind of help them distribute this software to a number of different buyers, in the electrical industry, or other partnerships that will accelerate that.
How would they think about pricing? So is that like, do they take a cut of a certain amount of like distributed goods, or like cut like, I don't know, 5% out of like each sale or something? Or is this more of like a fixed rate, and then like for from like a toy company to like I mean swimming pool toy company to food to like everything else, like are they all charging the same rate, or like is this like different from for each industry?
Yeah, it's based on volume of rebate, and so it's a fixed fee that's appropriate for the kind of size of payments that are being processed, right? And ultimately, I think that just aligns really well, right? Like, we don't want to be kind of taking a certain amount of profit from our customers. What we want to do is kind of price something that's appropriate to the size of the company and like deliver a very strong ROI. So the amazing thing is just like, hey, you pay this for your volume of rebates. That means that you're optimizing, X billions of dollars, and you're collecting 10x, or, 4 to 10x the amount that you're paying, because you're kind of using this software to properly calculate and optimize all of those payments. So yeah, I think, one of the important things always in pricing is like being really across all software categories, not just supply chain, is being really thoughtful and rigorous around value selling, which is just like, and especially in environments where it's harder to sell software. There's so many things you could buy. The things you really do want to buy are the ones that have very easy to understand ROI. And ultimately, when it comes up to the C-suite, which is like, hey, what do we buy? It's like, oh, I want to buy the thing that I can really understand is going to 10x my investment. So I think we really stuck close to that at Enable, and that's something that I think most successful venture-backed companies are good at.
Totally. I'm sure company like this have a lot of different like implementations of data, and like I wonder what kind of data are actually worth collecting, and what do you think it's like not worth collecting?
Yeah, I think in the supply chain, companies need to get really good at integrating with ERP systems. ERP systems, like there's some modern cloud systems that are that have APIs, and there's like green screens out there. And so like just being able to handle whatever the customer throws at you is important. I think the same thing can be said for WMS, warehouse management systems. Like a lot of those are pretty bespoke, have been customized over a number of years. Like, how do you integrate into that and make it work? And so, you have to strike the right balance between, hey, we want to get a lot of interesting data and we want to feed the platform, but at the same time, we can't be implementing something for years and getting every little piece of data. So it's like, hey, what are the kind of core systems that you can get really good at integrating into, get that repeatable, and make it so that you can get your customers live and realizing value, in a quarter or two.
I wonder, so like in terms of like looking at the newer like AI powered like service like Enable, like I wonder how can AI actually accelerate the process of like being in supply chain?
Yeah, I think generative AI is a technology that's very well suited to supply chain, and that's because there is so much manual work. There's so much manual data entry. There's lots of parsing of documents, like all the things that our LLMs are good at. Um, we see as tasks in the supply chain, right? And at the same time, I think it's an industry that certainly suffers from labor shortages, that has had booms and busts. And so I think looking at that technology and saying, hey, where is the rote work that can be automated? How do we kind of take this natural language understanding and the large language models to be able to say, hey, here's the data entry that we need to do. Here's the kind of patterns that we see. Here's how we tag this for customs. Like, those are use cases that will be very interesting in the industry.
I wonder, since you mentioned about like, so for you talk about generative AI, you also talk about manufacturing and distribution. Like, so for example, collab or copia automation. So like, I wonder for the manufacturer and distribution, like, how do you think about like, AI could kind of like improve the efficiency of manufacturing?
Yeah, I think getting into a little bit of what we discussed, like especially around product lifecycle development. Like, so you think about software lifecycle, right? It's like, hey, you can very quickly write a line of code, test it in a test environment, see if things are working, iterate and build a digital product in an hour and test it. You think about aerospace, automotive, these big industries with like lots of innovative products. Take that hour process and multiply it by 100 or 1,000. And that's just because it's like, hey, you've got to build a physical product. You're designing it in your CAD system. You're taking it out. You're running a simulation in ANSYS. Oh, you figured out, hey, here's what didn't work. It was massively expensive for that compute. And you make tweaks and you kind of do it again, and then eventually you've got a prototype, right? That could take many months. And so when you think about AI and manufacturing, things that I'm particularly excited about are just finding ways to shorten that feedback cycle, right? Understanding, hey, here are the tweaks that we should make to this product just up front because we know this is going to be better. And instead of having 10 simulation runs, you can cut that down to 2 or 3 because you've just been so much smarter around that iterative design. So I think AI is going to be quite powerful in that part of the world.
I wonder, so like, I feel like there's a lot of newer like niche coming into the ecosystem and in the supply chain. What do you think are like some really interesting niche for maybe younger investor to build a niche on? Like basically build an expertise on a particular niche.
Yeah, I think geo, like we talked a little bit about, things in Latin America, like interesting supply chain companies out there. I think if you can pick a niche like that, or Southeast Asia or other areas where like there's just not as much coverage, you can kind of uniquely understand these markets. I think you can give yourself a pretty serious advantage around geography. I think also like if you really understand the simulation space, if you really understand, how the big companies have been built in circuit boards, or, so like any of these kind of areas that are just old school, that are very entrenched, but you can really understand like, hey, here are the reasons why these companies have been so powerful. And, here's maybe how you disrupt them. I think that can be pretty interesting and lend some expertise to, an investor who's looking to stand out.
I wonder, so for example, like since like we chat about like the inflection stage investments, for supply chain company, can you like give us an example of like what do you consider as like hitting the inflection stage? What consider as like, after you have like you mentioned about like the like repeatability and are able to upsell. And I wonder like for in a more like, can you give us an example of like when you observe a certain company hitting the inflection stage, and um what are like basically like in general like the call like 3 benchmark that you're leveraging to evaluate if they have a repeatability or like healthy amount of like upsell? Is that like selling to one more customer has a have like, or maybe like increasing, yeah, like basically is there like a standard like data or like benchmark that you're using to evaluate that?
Yeah. Yeah. So I'd say usually we're looking kind of 3 million in ARR is where we start, where we consider like a reasonable threshold of repeatability. 3 to 5, I'd say is kind of right in the sweet spot for us at that inflection stage. We're really looking for, I'd say, 2 quarters of growth in new bookings, right? And so I think it can be hard when a company tries to raise off of a single good quarter. It's like, well, was this a bluebird? Were there a couple of things that happened? Or is this really the start of, repeatable momentum? So yeah, look at that scale, look at growth in bookings. I think early rep data is super helpful, which is like, are there 2 or 3 reps that are closing deals as opposed to like, hey, there's just founders or just kind of one hero salesperson. And so I think if you combine those 3 factors together, just ARR scale, or a couple quarters of growth in bookings, and then, some ability to do it across a couple reps and not just one, ends up being pretty strong sign that the company is potentially ready to inflect.
I wonder, so when you are looking at the team of the Series B to C company, um, what kind of function do you think they need? Is that like the product people, or since supply chain is such a um, differentiated category versus like the traditional B2B SaaS? And like, I wonder, like, do you feel like people typically generally have a really big tech stack, or would they spend most amount of like money on like sales or distribution? What's your advice for CEOs who are listening to build a successful team for your Series B to C company in the supply chain category?
Yeah, all these things are important, but I'd say more generally, when we invest at B2C, I think, go to market is just really the biggest swing, right? Because if you're at this stage, you've built a product that customers like. Obviously there's always more work to do. There's nuance in that, but like, hey, you've gotten to 3, you've gotten to 5, like you can probably get to 30 to 50 if you really nail your distribution, right? So getting that experienced go-to-market leader, building the infrastructure around RevOps, sales enablement, really understanding how to ramp reps and, build in repeatability. Like, I think that's kind of the biggest swing for companies who really nail it and, scale smoothly to that next level versus those that, have some hiccups and go through a bunch of sales leaders and just, can't really figure out that next level of distribution. So I think that's the most important thing. And then, obviously you get to a certain point again where I think it changes back, right? It's like, hey, I nailed my distribution. I got to 50, 70, 100, whatever it is. And now all of a sudden I got to figure out my next act, right? Like I'm pretty successful in my core market. Maybe some competition has come in, maybe there's another adjacent area that I need to get into. And like, then, I'd say product strategy, partnership, like all those things are important. They're all important at all phases of a company. But where we invest, like I think companies generally have a product that works, and like just really nailing that distribution is such an unlock to get them to the next level.
Totally. I wonder, since like you mentioned it on this, like you mentioned about this on another podcast about like, I think you chat with the Pepsi team and they have like a person who's dedicated to looking into like the supply chain category of things. Like call it like they look at like 100 companies a year or something. So I wonder, how do you collaborate with some of the bigger potential buyers in the domain to like evaluate and maybe diligencing some of the startups?
Yeah, we have a couple different things that we do. I think the Valley and venture in general has gotten pretty good at EBCs and like creating mutually beneficial relationships with corporates. And we have a team that does that. And, ultimately, like everybody's always interested in new technology. I mean, especially they're interested in AI. And like, I think we can uniquely tailor companies of interest to these corporates, right? And so it's like, hey, really understanding what are your priorities and then saying, hey, can we get you to come in and match you up with either our companies or a select few prospects that like we really think could move the needle for you, right? And And so we want to get their opinions, but we also don't want it to be one-sided. We want to make sure that like we understand their priorities and we're helping them be at the forefront of the types of technologies and teams that could help them solve it.
Is there like a threat that you feel like currently people from these bigger buyers are looking for?
Oh, AI. Yeah, all AI. Everyone is wondering like what types of AI technologies, where am I going to get disrupted? How can I adopt this safely? And so I think that's just top of mind for everybody.
How would you select if call it like a batch of potential companies to like feeding into the ecosystem to like see if they're actually get like a successful customer from these big tech or like big companies in general?
Yeah, I think it goes back to just understanding priorities, right? It's like, oh, do you want to upgrade your call center? Do you think that's the biggest area for AI and automation? Well, let's make sure you meet with Observe, which is one of the companies that I work with that's kind of at the forefront of innovation there. So yeah, just really making sure there's just like only a handful of strategic priorities that really matter every year, and like we want to make sure that we're really understanding those and delivering the right companies in that arena.
I wonder, is there like like for example, in this year, I'm sure you have seen thousands of companies. Like what would you say are like top three company that you feel like are really interesting, like in doing something extremely innovative?
Yeah, I mean, I think you got to start with the LLM, right? I think, when you think about the value creation and just the excitement of, the actual kind of foundational model, Anthropic's at the top of the list, right? And, this was a company that did not have as much fanfare early on as OpenAI, but you look at the quality of model that they have now, with Sonnet 3.5 and just the kind of developer response to how powerful that can be, and especially in the coding and enterprise arena, like that's just a company that everybody wants to be involved with. People want to learn more about, and it's just going to be kind of an incredible part of that ecosystem going forward. I would look at cybersecurity. Our company Abnormal in email security. They just announced around it at 5 billion. But yeah, look at what just happened with CrowdStrike. Like ransomware, all these sort of things are top of mind, and email is still the vector by which all of these things are happening. And they have an AI based technology that's just better in that space. So I think that's going to be continue to be a company that will be very significant and very important. Just given the continued importance around cyber. And then finally, I'd highlight. I just mentioned this, but Observe, right? Generative AI in the call center is going to be one of the areas where the technology will be most impactful. And I think that team just really understands the right mix of automation, the right mix of agent support, and delivering that at kind of enterprise scale. That will be a very disruptive, interesting technology going forward as well.
I wonder, so like since like I know that like you guys made a really big bet on Anthropic, why do you think Anthropic was like quickly picking up the speed from like, at the beginning it was like OpenAI, it was like having a really big market share, and how do you think they're differentiating themselves? Like obviously from the technology perspective and from like a go-to-market perspective, like how do you think like they are doing something that's like really matters to like having more people like using their product?
Yeah, I think their approach to trust and safety, transparency, accountability of the LLM, lowering hallucination, like all those sort of things have really positioned them nicely for the enterprise success that they're having, right? And they have a great consumer product too. Like Claude is fantastic, but like OpenAI is really known on the consumer side, and I think Anthropic really, because of their focus on trust and safety, like has the opportunity to be the dominant player on the enterprise. And there's only a few people of the quality, on the technical side, and many of the Anthropic folks are ex OpenAI who really know how to build these models, who know how to kind of train and release a world-class new model. And like, Anthropic is lucky to have a number of those folks. And then ultimately, like, just given the amount of capital that needs to go into these companies, like partnerships with the large cloud service providers are super important, right? And clearly, OpenAI has Microsoft, but Anthropic has Amazon, and the Amazon distribution, the importance of that partnership, the investment that's come in, I think just really allows them to gain credibility, go to market with kind of a core partner, and really elevate themselves to a level of recognition and adoption that you just really couldn't get if you were to kind of go at that totally on your own.
I wonder, like, so using the company that you just mentioned about like Observe AI. So like so basically they have clients in the financial services space, insurance, like healthcare, retail. What like as an investor, like how do you think they are entering different spaces quickly? And also like since like they're disrupting like the you mentioned like the call center, like since I feel like many people don't like the, I guess like the customer service aspect of things, like how do you think they are doing differently versus like the existing solutions that are just like maybe an AI chatbot or something?
Yeah, and so they really took an agent centric approach, right? And like I think we've all been on a call. It's like this call may be recorded for quality assurance purposes. Historically, it was like 1% of those calls got listened to. It was very manual. There was like keyword based searches. It was just like a harder use case. And like Observe took modern technology. They understood like that if you could do this for 100% of calls and really gain insights and really understand, hey, how are agents treating people? When are customers frustrated? Like where are the areas that could improve? You could pretty rapidly elevate it from this is just kind of a check the box compliance where randomly recording calls to something that like actually provides data that like feeds business insights and makes you better and delivers better customer experiences. So they very much started from that ethos. They've been very successful at that. And now you start to think about like, hey, how do you take the automation technologies, how do you coach agents in real time, how do you automate certain parts of the interaction, and how do you create a holistic platform that's going to create the low level automation, hey, for some of the basic queries, but at the same time make sure that like for the more complex stuff that your agents are delivering on best in class customer experiences. So I think they've just uniquely nailed that in a pretty interesting way.
How did you find out, like since like you invest in like Series B and C companies, like um can you talk about from like sourcing to diligencing a company like this? At the beginning, how did you encounter them? Is that like from earlier stage investors, or did you track this company since like Series, I don't know, seed or something? How do you typically generate like a effective deal pipeline for yourself?
Yeah. Oh, there's so many. Like Observe in particular was sourced by my colleague Sunil Chaya. He runs a fund now called Kearney Jackson, which is a seed fund, and they sent us a lot of good deal flow from that side as well. So it can come from all over, right? Like cold outreach, relationships, thesis work, conferences. Like I think as an investor, you always need to be aggressive about pursuing all those channels, right? Because great deals could come from anywhere. And, if you're get complacent and say, hey, I've got this great portfolio and things are going to come from referrals, I think you're going to miss a lot of great stuff, versus kind of getting out there and hunting.
Um, when you are hunting at a certain deal, what matters to you? So like, is that like you have heard about them from somewhere? Would the indicators be like, call it like really other top investors, or would it be like you have seen this thing on the news, or like you've been deep diving into supply chain ecosystem that you're just specifically looking for a type of startups like the Observe AI kind of category things?
Um, I think the hype and validate, like, matters less than founder quality and, just product quality, right? So it's like, are these areas you're excited about? Are these good markets? Is the kind of, for us, the proof in the pudding around, traction. I think, yes, like, ultimately high quality investors tend to be in high quality companies, and there's, powerful correlations there, but it's not enough to just say, hey, these guys got a lot of press or this investor's in it. Like, ultimately, I think from a first principles and fundamentals viewpoint, like, you have to have some belief that this is just a very high quality, enduring company in a great market for years to come.
I wonder, so like since like I feel like earlier stage investor, like call it seed or series A company, they have like less data. So they would really building a funnel through call it like they work at X company for like 10 years and then they decided to do like their friends decided to do a spin-off or something. Is there like a specific deal pipeline? Like you mentioned like about like, you would go to conferences or like hearing from other investors. How do you kind of like how do you kind of spend your time on like moderating all these kind of deal flow funnel to find like the most quality deals?
Uh yeah, it's tricky. There's a lot of noise. There's a lot of companies that you're meeting. There's a lot of great companies that we're not investing in, either because we messed up and didn't make the right decision, or because we just didn't see it. So ultimately, yeah, there's some kind of signal, like founder background, like, do they understand the space? Did they spin out of a very technical company in cybersecurity, and so that they're kind of well positioned to build it? Are they a repeat founder? I mean, there's all sorts of different heuristics and signals, and I think people will look at it differently. Like, some investors are just, because of their stage, like, completely people focused. There's more that are market focused. If you get to late stage investing, like, you're probably more numbers focused, right? Because that tends to matter more when you're getting close to the end of the whole period. So there's no right way to say, hey, here's the right way to filter it. But, like, yeah, ultimately, I think trusted referrals, people who say, like, hey, that you work with, that you trust, who kind of vouch and say, this person is just exceptional, is never a bad way to go.
I wonder, since like you have been in Menlo Ventures for over 9 years, like what was the journey like from being a principal to a partner?
Yeah, I mean, it's been a great run. I think one of the unique things about Menlo is just, we're a very reputable, storied brand, right? The firm's been around for about 50 years, but at the same time, like, we're refreshed, we're hungry, we're kind of always challenging ourselves, and so for me, being part of that evolution from Menlo, I think transitioning to the next generation was, like, very fortunate in a lot of ways, right? Menlo was growing, we had new partners, and so for me, there was just, like, a lot of opportunity that I could take on earlier in my career than I think I otherwise would have been able to. So I think there's a lot of luck. I think there's a lot of timing in it, and fortunately, a lot of these things came together at Menlo, and gave me the opportunity to do some of these things just a bit earlier on.
Since like, what would be your advice for your younger self? Like what would you do kind of differently if you enter and venture again today?
Um, I mean, I do, like, I think I was fortunate just to enter some things at the right time, to source some good companies, to work on some good things. So, like, overall, it's been a good journey. I mean, the main thing I would just talk, like, 2021, 2021, like, that kind of inflated period, some of the mistakes around investing process, prices, like, all those sort of things, like, that are pretty obvious, not obvious, but are just clear with hindsight, like, just kind of being a little bit more ahead of that, and kind of understanding, what that cycle was going to look like, I think would have been uh, awesome advice if I could go back and give it to myself.
like what kind of skill do you feel like being in venture, especially in like Series B to C, actually you feel like you like someone need to master? Like, is there a skill that you're constantly trying to get better at as an investor?
Oh yeah, all of them. I mean, investing is about, I think, it's sourcing, picking, winning, and building, right? Is kind of the four key tenets of investing. And I think, when you're early on in your career, you're really focused on sourcing and picking, right? To some extent, like you're finding great companies, you're doing the diligence, you're trying to figure out and build your pattern recognition around what's going to be a good company. As you get more senior, winning becomes very important, right? Like the best deals are very competitive. Like you have to have a unique insight, you have to have great references, you have to have, built some other great companies along the way, in order to have the right to work with a great founder. And then, yeah, once you're kind of in and you're on the board, like that pattern recognition, that ability to kind of work with teams, to bring in great talent, to, help them see around corners also becomes important. And so those four pillars are critical at any point. And like, you can't really be great at this job without being great on all of those points. So I think you've always got to be pushing and working to improve all of those different skills.
What is one piece of advice that you would give like a founder in the supply chain space today?
Um, yeah, I would say just like really be cognizant of where your customers are at. I think supply chain is an industry that has its ups and downs. I think it's like four times as volatile as the overall industry. And so like, don't take too much when your customers are doing well, and like, be able to support them in the downtime. So like just be cognizant of how the industry can turn and like how to position your company for success in all macros, right? Like we've seen, unfortunately, you look at Convoy, you look at these companies that just did really great in the upcycle, but didn't have the business model to weather that in the down cycle. And I think, now that we're in the down cycle, like, hey, make sure you're architected to do great things when the market turns. So yeah, just be cognizant of that volatility.
Um, we are at the last like 1 minute fire round of the interview. Uh, what's your favorite book?
My favorite book of all time is Harry Potter.
Oh, I love it. I love that. So what's your content diet look like?
My what?
Content diet.
Content diet. Oh, mostly reading. I actually try and go back and forth, from like a fun book, like so a thriller, a mystery, that sort of thing, to like something that's business and educational. I just read Brad Jacobs' new book, which I think was really good. And then, on drives, I'll listen to podcasts, audiobooks, that sort of thing too.
What's your favorite conference?
I like the Manifest conference, the logistics focused conference. Usually it's in January in Vegas.
Who would you invite to your dinner party?
It's my founders, that I work with, and maybe some prospects.
Uh, who made the biggest impact in your career?
Um, just the partners Venky and Matt that I work with at Menlo. The senior partners who have kind of mentored me and given me the opportunities to succeed. I think ultimately, Venture is a business where it takes a very long time to show results, and so like you have to have people who believe in you and kind of show you the ropes along the way.
What is one piece of advice that they have gave you that made a big impact?
Focus, just like, making sure that you can pick areas and thematic things that like you can truly be an expert in, because it's hard to win in this day and age as a pure generalist or just looking for great numbers. So like you have to focus on certain areas and have unique insights.
Where can we find you outside of work?
Just usually with my kids. I have two young kids, so playgrounds, beach, swimming pools, and then when I'm on my own, I like to get out and do some road biking.
Amazing. Well, Steve, thank you so much for coming on the show today. Love what you have shared, and it was very informative and fun. Thank you.
Yeah, thanks for having me.
Let me quickly